Digant Haria is now with us and we can go across to him. Digant, what's happening? Diwan housing is down 40%.
Yeah, so see, when things like this happen, you usually try to find a fundamental reason for it or something, but this completely looks like some kind of margin selling or something to do with forced selling happening, because as you've seen, last 4-5 quarters, Diwan has been showing very robust numbers. So we really don't think there should be a lot to do with the fundamentals of the housing finance business as such, but yeah, it is more of action on the screen, and then a price fall in such market gets its own reaction. So yeah, that's the first comments. Maybe if you have to. If there are any other questions.
Digant, just request you to stay on with us. We have a management of Indiabulls Housing now joining us. Mr. Ashwini is with us on the phone line. Mr. Ashwini, what's happening in the entire NBFC space? Anything that you can pick up on the ground?
So I think this market has its own views, and these are shorting opportunity for some of the market players, but I don't see any of the housing finance company facing any pressure of any kind. There have been default from a large NBFC on some of the mutual funds who had those papers. They have sold some other papers, but for example, Indiabulls Housing has just raised more than 2,000 crore from the money market at 7.7% in the CP market and around 8.85% in the bond market. So our rates are intact. Nobody has sold our paper. It is just, I think, the panic reaction because some market participants might be distress selling some of these bonds. So that's my take. But again, these market fluctuations at times, some market participants will, crack, and then that will have a percolating effect on all housing finance companies or all NBFCs. That's what may be getting displayed in the marketplace.
Hi Ashwini, this is Nantara. So let me get this straight. You believe that maybe one of your competitors, someone from your peer, has gone in for a distressed sale of some sort, and this is a rub-off effect that's suddenly come into the markets the last few minutes. You got Diwan housing down 30%, your stock is down almost 11% in trade, and there's no policy from the RBI, the government, that's coming up that's got the market jittery?
Yeah, no, I'm not saying that any of our peers that would have sold anything in distress. It is the mutual funds holding some of these papers, and because they have incurred loss somewhere else, so they must be selling some of the papers they have of financial services company, and in that they might have sold some particular paper at distress, which then impacts negatively the image of that company whose papers have been sold. So that may be playing out in the marketplace. Otherwise, from stability perspective, for example, Indiabulls Housing maintains 20% of its balance sheet in cash. So at no point in time you will ever see a fund selling our paper in distress, because we buy that back because we have this 25,000 crore cash on the balance sheet as we said. So that's the stability most of the business would bring to the table. Of course, these reactions are overdone. We had seen during tapering tantrum in 2013 also, some of the stocks were hammered down a lot, and it is that typical knee-jerk reaction that may be playing out.
Right. Mr. Hooda, this is Poonam here joining in from the Mumbai studio. Just wanted to understand, and what we understand from my entire group of banking analysts as well, that the one-year paper has been sold in the market at nearly around 11%, and I guess that is exactly what you're referring to. But do you think that there may be furthermore stress coming in on the bond market, and hence would that mean that we could see the cost of money getting more over the course for HFCs, for you as well as the entire HFC space, given the kind of turbulence that we are seeing in the bond market?
I don't think so. This has any implication for borrowing costs for housing finance company. I don't think so. Any housing finance company or non-bank will be issuing paper at a huge distress. Yes, fund managers will be little more selective while granting the credit. and being a AAA from international rating S&P and Moody's local company CRISIL and ICRA, we become a safe haven for times like this when mutual fund managers don't prefer lower rated paper. So you will see flight to safety, and that is what will play out.
What could have led to the one-year paper being sold at 11%? Could you give some more light on this for our viewers?
Hello.
Right, Mr. Hooda, what could have probably, I'll just repeat, what could have probably led to the one-year paper being sold again at 11%? Could you just give some more color on this just for the benefit of our viewers?
So I'm not aware of any paper of my peer set being sold at 11%, but I'm sure there was a news that some of the funds are selling distress. Our papers are all single digit, so they have never crossed double digit in any market, and we continue to borrow below 9%. The more recent one being at long-term 5-year money at 8.8 and short-term money at 7.7%. So I don't think so, that is a market-wide problem or position.
Do you think that the margins could come under pressure because there is good amount of competitive pressure in the market? We are also seeing slightly slower growth for the entire HFC sector as well. Disbursements have been going slow. We are seeing some amount of pressure coming in certain states also in terms of the housing finance segment. What's your take on that?
In fact, housing finance companies have been growing at their fastest clip. There is no slowdown. If you've seen, the largest ones have been growing at 20% plus. The players of our size have been growing. We grew at 33%. So I think the growth in the market is very good. It is more of money market function where, bond markets from time to time gets locked in. So I don't think so, it is any worrying sign per se out there in the market. And then I'm also surprised at the fifth movement. So it's a short seller having a field day. You would have noticed that there are limited activity in most of the stocks in the recent past. The liquidity number of shares trading has come down. So with very weak volumes, somebody can short sell the stock and can bring down the prices of some of these liquid names.
We are speaking, Ashwini, markets are down 20 odd points. Digant Haria is also with us. Digant, what do you make of this fall in Indiabulls? It's down 20. Diwan Housing, when we started the phono with you, it was down around 30%. Now it's down 50%. Canfin is now down 8%. What do you make of this incremental impact which is coming in?
I think most of the risks for these stocks are already known, that interest rates are going up, spreads are coming down. So we as a house have been negative on this entire from June 2017. That's almost a 15-month period. But I think today's reaction is clearly more to do with the action on the screen, or the shares and the margin press selling and all of that. I think it has got very little to do with the fundamentals of these companies. So I think this is how most of the bad phases of markets or of sectors end. So maybe we are hoping that today will be that end, and hopefully the prices will stabilize from here on. Because the business, as we can see, the large housing finance companies are doing a lot of brisk business. So business-wise, we don't see a lot of problem. Yes, margins will come off. Profits may not be that great, but I think those are not the points that can result into a 40-50% kind of price fall in a day.
Right, Digant, I know that you have been...
Just wanted to highlight, Poonam, DFHL is now down 50%.
Right, that's right, Pankaj. Good amount of sell-off coming in on the HFC stock, especially Diwan Housing. Digant, if I'm not mistaken, you were slightly bullish on Diwan Housing, and this seems to be a huge amount of concern in the bond market. I will take a two-part question. A, do you think that we may... this entire reaction that's led on account of higher prices in the bond market, will this continue? And B, what according to you is the fair value for Diwan Housing? Do you think that the 50% cut in today's trade is justified?
See, we were only positive on two stocks on the housing finance space. One is Divan Housing and second was HDFC, because they have been doing, tremendously robust business despite a slowing market. So I think, these are days when the fundamentals take a back seat and the action on the screen. We would be really surprised if there is a bond market default or any such adverse event. These events justify a 50% fall, but we would be surprised if there are such events, because the ALMs do not have such huge mismatches that such a thing should happen. But anyways, 50% fall in stock price, so we'll also remain watchful of the events which happen. And as we've said that, business-wise they are doing well, but what happens on the share trading side is something which we'll come to know only in the hindsight.
Right, Digant, thank you so much for taking out time for us. Ashwini, a pleasure that you could join us at this point of time when probably a lot of investors would have also been calling you. Just as we are leaving you in this show, just pull up all the NBFCs once before we wrap. So Divan Housing is down close to about 50-odd%. You have Repco, which is down 10%. Indiabulls Housing, as we are speaking, is down close to about 20-odd%. So it's clearly showing you that there is a huge panic in the NBFC markets today, which can trickle down to other stocks as well if there is no clarity as to why this is happening.